Hi, Warriors. How's everyone doing today? Ready for BOJ and Fed this week? Prepare for it. Ryan, how are you? James, hi, Kman. Sinatra, how are you? Patrick, Michael, how are you? So, Kman, why don't I start with you? Looks like Ryan isn't here. Why don't we talk about US dollar yen? Are you tempted to get short in front of BOJ?
No. Good morning, Dale. Good morning, everybody. Uh,
Okay.
it's
No tempt, no
that's
temptation.
um oh, I mean the thing is, as I was explaining on the flow show as well, we have to look at this a lot of variables in there as well.
Like the Fed?
No, purely on the Bank of Japan. So people, I hear everybody saying it doesn't matter whether they move this month or next, but I beg to differ. Psychologically, there's a difference. Because if they cut before the end of the fiscal year, we are still at the end of their fiscal year, it may spur more, how should I say, fiscal year-end flows from corporates or big asset managers, the insurers. It's kind of sending sort of a signal, right? Whether it's speed or not, it's sending a signal on the date and that they feel quite confident. So I think it may have an impact on the flows if they do it this month. So there I differ from other people who say that it's not important because we know that they will do it anyway. I do think that it's important, and if they don't move, it's equally important because then I think the yen could get actually a slap because the FOMC won't move, right? The Fed won't move, and we
Right.
see and we actually see the market um, pricing smalls higher interest rates now in the US. So if the Bank of Japan doesn't move to next night, it's going to be, I think, psychologically also equally important, and we could see the yen get a real slap around the ears, even
And,
though then it's set in stone that they will move in April.
and good morning, guys. And I was just reading this morning. Kman, we're as Dale and I, we wake up obviously at silly hours in the morning. You get up and you kind of get reassessed and start reading everything. I just read this morning that the Citibank analysts dropped their call, which basically means that they changed to looking for NERP removal tonight. And so what the reason why I point that out is more and more banks are starting to lean that direction. So you're exactly right. If they don't do anything, the problem is we're going to see a squeeze higher in these yen pairs.
Okay. Let me ask both of you guys, has the move in yield last week back over 420 in the 10-year changed your view on the dollar against euro and cable and Aussie?
Are you talking to me, Dale, or Blake?
Both of you
Yes,
guys.
both. Go ahead,
I,
K
I
man.
am I am in the camp of the dollar deep buyer, deep buyers. Um,
So that is a change because for you,
yeah, I've
right?
I've changed end of last week actually. Just before those data, I said like, well, in Thursday into Friday, last week I saw the correction coming, which happened, and then at the end of last week, I changed again because I thought the correction was kind of done, and um, yeah, I'm more of a dollar dip buyer than a dollar rally seller. Well, everything barring yen because it's so important, right? I'm not gonna go long cash dollar yen ahead of the Bank of Japan, but the one that I'm looking at, if we can move away from the Bank of Japan just for a minute, is RBA because I think the market is perhaps slightly complacent about them just being on autopilot. I saw the CPI and the jobs report, and I think even though they won't move rates probably because we're still above their target zone in the CPI, etc., but they may actually start to prepare us for something. And I think there if I see anything back towards that 66 figure area before the RBA, I may give it a go. I may give it a go.
And I want to add to this too, and then I want to go back to your question about yields, Dale. The RBA, I want to make sure everybody remembers this and is really clear on this, because at the end of 2023 and going into this year, everybody's really looking for a more hawkish RBA. They were still expecting the RBA to continue to raise rates. And so,
Think so?
just because everybody was so positioned, I think has been one of the negatives of the Aussie, going into the beginning part of this year, and one of the reasons why it just can't stage a rally, even with copper ripping. I mean, look at copper, Dale, and you look at the Aussie and go, geez, between stocks going higher and copper going higher, the Aussie can't even get out of its own way. And so I think the Aussie's at risk of some significant selling on any dovish slant that we get today.
Yeah,
And
I'm
so
looking
that,
at this against the high for risk. I'm looking for this.
yeah, I think, I mean, if you pull up the ForexAnalytix platform, I updated it this morning and made it real simple for everybody, because, it's pretty clear technically where the breakdown points are.
Yeah.
Right on the basic analysis tab on there. But going back to your question about yields, I was gone, the beginning of last week. I was in Mexico, and after the CPI data came out, and that basically turned yields a little higher, but we didn't get a huge reaction. And then the producer prices really kind of spurred, that move there. And you can see that we're in what you would have thought was a bear flag pattern, but the flag, and I have it drawn on my screen, if you don't want to just go out and just draw the whole thing, the flag pattern looks like it's nullified, because the flag is longer than 50% of the flagpole now, which means that the flag is really not a flag. It's just an ascending channel, which means that yields are probably going higher. And if yields are going higher, then the dollar is probably going higher. And
You
then
have a
if you
target
follow
on these off anything technical measured moves, maybe back to 61 and 8, 454-ish or
454,
something.
yeah. I mean,
Yeah.
that's I think we could grind there. But then if you look at the dollar index looks like it wants to rip. So I personally, I think that, yeah, we could get up to the 618, but more importantly, if the dollar really starts to get moving, because all the dollar has to do is clear the 50 DMA and the 200 DMA this week, and it's sayonara. The
Yeah,
dollar's
they
gonna take
come
off.
in around that former breakdown 103.80-ish. So that was a big number on the way down. Once we closed under it, we had the 3 day sell-off. We get above it. I agree with you. In fact, I think we could see 105.80, which would be 61.8 back or 78.6 back. I'm not sure, but all the way up here.
Yeah, and I
My
have I just posted the chart on Twitter, so I'll show you guys here in a few minutes.
and
So,
I talked about this last week. Looked like a false breakout over 28. So I'd sell any rips in cable too.
mhm.
They cleaned out all the stops. The breakout had no follow through, and EG actually looks, eh, you know, uh, where I'd read my preferred short between euro and cable would be cable.
The euro sterling, and I maybe like to get Kman's views here, but I'll tell you what, the euro sterling is set up perfectly for a range extension. So if it breaks 85 pence, it's gone. You can just short it and look for a good 60-70 pip move, and I think you can leave an outstanding sell order below those lows, below that 85 pence level, and just basically just leave it there. And if it breaks, it's going to break down. The flip side is, if it breaks 65.80 or ask you 65.80,
Mike
85.80.
Pence, Mike Pence has an order under the Pence here.
Yeah, there we go. And if it breaks above 85.80, it should rip higher to 86.50 pretty easily. I think this is just a simple range extension, but either way it breaks, it's going to be a big one. It's just you got to wait for it. Or trade inside of it and trade inside of that range and just, you know, where the sandbox is, you know where the edges are. So just play in the sandbox for now.
Does 103 look like an important level in the Dixie on the 4-hour and 2-hour? It does to me. Like that's where I would try pullbacks if we had a pullback in here towards 103. It's not that far away, 30, 40 pips. That's how we could get maybe, 128 or so here, and Kman sell zone in Aussie. Anyway, that's all I have.
Yeah, so let me go ahead and I'll just show you guys a few things here. And then I want to have a little bit of a conversation regarding the RBA and the BOJ. Continue this conversation because it's going to be a big deal this week. Don't forget, we do have a big semiconductor conference happening right now. Nvidia is up this morning, and you can see stocks are rallying going into the beginning of this week. It's Mutual Fund Monday, so why not? But going back to the Aussie really quick, Dale, let's I'll just show you guys the Aussie dollar. Let me pull up the Aussie really. Oops, I just keep flipping past it. There it is. So real simple analysis for the Aussie. If you look at, you look at last week, we broke out a triangle. We have this flag pattern that was developing. This is last week. And then we, know that there's going to be support. Okay. So fast forward to today, here we are today. That flag continues to develop. We continue to hold that support ahead of the RBA today. So, well, I say today because it is going to be today for me. For us in North America, if you're in Europe or you're in Asia, it's going to be tomorrow or really late tonight. Anyway, the reason why that's so important is because if you're looking at the Aussie dollar, it's just really critical, because if you start breaking below basically today's lows, you're going to trade, it's going to break down, because anybody who's been bullish over the last, you think about this, anybody who's been bullish over this last week thinking the RBA is going to, be hawkish, or stocks are going higher, copper's breaking out, China's finally stabilizing, let's buy some Aussie dollars. Anybody who's been in that camp is going to be wrong below here, because you start breaking below 65.50, you're going to open up the door again for this, these lows, which I think they're eventually going to get taken out. Now, Kman, just because there's a lot of people that are, just tuning in and they missed maybe some of your earlier comments. How do you feel about the RBA tonight?
Yeah, as I said, I think there's potentially a bit of complacency around the fact that they are just going to be on autopilot. And yeah, I'm looking at that 65. There's been this box 65, 25, 40, and it's been banging its head against it. It's been support. It's been traded so often. I think if we come out of the RBO it could be 65, 40, could be 65 and a quarter. It's probably lights out.
This is the level that Kman's referencing. That's got there's so much play around these levels.
Yeah, it's been nonstop around there.
Yeah, so you gotta be real careful. And I think the word you just used is a great word to describe the markets and their view on the RBA: complacent. And so again, I will reiterate, when stocks go higher and the S&P or in the Aussie doesn't, and then you add copper and realize that when copper's ripping and the Aussie is not going anywhere, that's a problem. It's going to be a problem, because if risk does turn, I know that you can say that till the like something like that's going to happen. It seems like it's never going to happen. But if something like that does happen, we do start to see a little bit of a pullback in risk. Aussie is going to be the first one that you have to have your attention turned towards. I mean, it really is. Now, it's not just the Aussie dollar, take a look at some of these other Aussie pairs. You got,
Clay, can you go back to the Aussie for a sec?
yeah.
Where's that bottom? You had a red line at the bottom on that last chart you showed. I was wondering. Okay.
Oh,
So
down here.
Yeah. Where's
Yeah,
that come in?
it comes down around 63 cents.
Okay.
Yeah.
Thank you.
Yeah, sure thing. No, I'm going to go back before we go to the to talk more about the yen and talk about some of the asymmetric risks about the yen. Dimitri just mentioned as well, because we were talking about how Citibank changed their call over the weekend. Dimitri said Goldman changed their call as well yesterday evening. No more NERP and NERP and YCC removal, and they were saying April before. And you've seen a chorus of banks do that, and so that's why I think there are risks, asymmetric risks in the dollar yen. So don't just think that, oh, nothing else is going to happen. They're going to remove NERP and you're going to see, the yen strengthen. I don't want you guys to put yourself in that hole. And this is coming from somebody, myself, who has yen long exposure, because I've been trading the Canadian yen and the Swiss yen to the short side over the last couple of weeks, week and a half or whatever. So anyway, we'll come back to the yen. Let's talk about the dollar index, because Dale, this is what I wanted to mention about the dollar. Let me remove this really quick.
You have a Gartley.
Yeah, so this is, how I've been viewing the dollar, but more importantly, here's your daily chart, and this is the 50 DMA. This is the 200 DMA. You can see it right there. You clear those two levels this week. Now, thinking about the Fed is meeting this week. Not only the Fed, but 13 other central banks aside from the Fed are meeting this week and making decisions on interest rates. A lot of people are, just remember, are still thinking there are going to be, 3 rate cuts this year. And if we walk away this week scratching our head and saying, shit, I don't know if we're going to get 3 rate cuts this year in 2024. We'll be lucky if we get 2, because maybe some of the dot plots have moved. If that happens, the dollar is probably going to firm up. And this is not, and just remove the BOJ out of this equation, because the yen, I always say the yen is on its own program when you're dealing with the dollar index. I mean, yes, the yen is 17% of the dollar index, the genetic makeup of it, but really I'm thinking more of along the lines of what's happening in the rest of the dollar pairs. And you can really see the dollar strengthen and the yen strengthen at the same time. What it looks like is the euro yen completely collapsing, pound yen, Aussie yen, those completely collapse, which could very well be the case following the BOJ this week, tonight, tomorrow, tonight or tomorrow morning if you're in Japan. More importantly, the dollar and the yen strengthening together, you have, yen pairs that really do take it in the rear end. Anyway, here's the dollar index, and I think it's a perfect Gartley pattern setting up. It really is. You got basically your 618 holding here. I mean, yes, we overshot it by a couple points, but again, we get above the 200 DMA, and then you're looking at a squeeze. And if you think the 618 is going to just hold it, which will be 104, I beg to differ. I think we're going to go a lot higher. This has been a turn of events, which, going back to your initial comment, and this is why I wanted to talk about it, is yields, Dale. You look at like the 10-year. Yeah, I think that we're in a bear flag, but that bear flag is pretty much nullified at this point. We're getting close to nullifying it. If we get much above this 50% retrace and start getting up towards the 618, you can just throw the bear flag pattern out the window, and next thing you know, you're looking at really a continued rise in US yields. And then US yields are probably more on the of this look. Now you ask yourself, how in the hell can the 10-year get back to 5% or higher? Well, I think it's quite simple. Go back to the middle of last year, 2023, and all people have to start saying, all economists have to start saying, all the market has to start saying is higher for longer. that means there won't be rate cuts in 2024. That's what was originally thought in 2023. So if we get back to that point where the market doesn't believe there's going to be rate cuts this year because of sticky inflation, because of a strong economy, whatever it is, 10-year yields are going to be trading back above 5% or at 5%, in my opinion. And why can't this happen? I mean, yeah, Kman, what are your thoughts here? I mean, do
That'd be
you
a
think
third
we can get
drive.
back there?
That'd be 3.
I personally find 5% a bit rich. But having to price less cuts, I can really lively see it coming. Really, really, really. They probably will do something unless we continue to show those bumper jobs reports together with the sticky CPI. Yeah, CPI is going to tick back up because oil and commodities are going back up, and energy is flying back up. So it could at least be sticky. So pricing out other cuts, yeah, possibly, but 5% looks a little bit rich. But who will say? We could be in a situation where the inversion gets a bit deeper, because if you need to scale back on rate expectations, the 2-year will probably be much more dynamic than the 10-year, which should be more dynamic than the 10-year. So that thing is going to go back to 5% probably. But the tends to follow. That's going to take some really good reports out of the US on the data. Well, that's my opinion anyway.
Yeah, and we should probably just revisit this conversation in June and see, after this week and see where we're at. I mean, we could be sitting here in June going, "Holy crap, I don't know if we're going to get a rate cut this year." And that's again, you try to price out what are the risks at this point, and is it even possible? I don't think really the Fed chairman has, I mean, yeah, I guess he's kind of wavered around a little bit as of late, but he has been pretty staunch on telling us
Not in
that
December. In December, he was Dr. Jekyll. He released the animal spirits. It was almost like a victory lap. And that's what lit up the market that was already going up and took yields down and had people pricing in 6 cuts.
Right.
So, I mean, he has not been consistent as far as, me watching him. He's been bipolar.
And the market's been bipolar. I'm sure we could all agree.
I mean, his statements for sure are. So now he's going to be Mr. Hyde Wednesday. Right. I'd be surprised if he isn't with the data that's come through. But December, he definitely wasn't. And, that was like a green light for everyone. And, once a genie gets out of the bottle, it's tough to put it back inside. And the only thing that'll do it is, him letting rates, follow the market and the numbers and confirm what he said on 60 Minutes, that rates are going to have to remain high for longer. And, anyway, I'm not impressed with, if anything, I don't see consistency with the guy.
Yeah, well, it's going to be an interesting week listening to him. And
he's a politician.
What's that?
He's more like a politician than a Fed chairman.
Yeah, I mean, you can't. I don't envy his job or any central banks for that matter. Yeah, I mean, and he gets to help manage his own wealth and
he used to be able to get manage his portfolio without disclosing, and he knew I think he knew what the Fed was going to do.
Yeah. Right.
Anyway.
Hey, real quick, just want to point out a couple of things. So the S&P is, grinding higher in this ascending wedge. You can see it here. Obviously the big resistance in the S&P is going to be the 5,200 level. That's 127% extension of the, 2021 to 2022 range. right? So
Wow.
we're basically there. I mean, you can argue that we're there. One other thing I want to point out is the Nasdaq 100 has completed its bull flag pattern as of, you know, the last couple of weeks, and now we're just struggling. And it's a big, you know, event with the semiconductor index, and not, it's Nvidia conference. Obviously, you can see Nvidia is actually, you know, up this morning. It's up about 2.7%, gapping higher. And the semiconductor index as a whole is going to be very, very, you know, very much in play this week, as we got this, you know, head and shoulder pattern that's, you know, it's moving around. Now we're going to gap higher this morning and probably be testing the neckline again in the head and shoulder pattern, but just keep this pattern in mind, because I think it's going to have a lot of, you know, if we do see a pullback towards the 50 DMA, it's going to have a huge impact on what's happening in equities. Remember, it is Mutual Fund Monday. That's why you get Mutual Fund Monday, then turn around Tuesday. A lot of money coming in the markets this morning. After the weekend, we'll see how the markets respond once you start getting commentary about the you know, what's happening at the semiconductor, you know, some of the headlines, and what all the headlines
Don't
are about
forget
AI.
Whiplash Wednesday.
Yeah, and then we get Whiplash on Wednesday. There we go. Let's see. Kman, there are, as we pointed out, a lot of central banks that are meeting this week. What is you know, I know you spend the weekend looking at you know, looking at things and opportunities. What's are you seeing as your best opportunity this week?
Yeah. Okay. If you, because the BOJ is going to be this that lottery, you know.
Yeah.
If I want to play the surprise trade, and I'm looking at it, I might buy a short-term call in the dollar yen just to play the surprise that they don't move, because then I think we are in the month at all-time highs. Not all-time highs. We're not going to
Above
400.
152 is
But
what you're
above
saying.
one, yeah, I think we are going to end around 152. But it all depends on the month, on the fiscal year end flows. But because I think the corporates and the insurers are waiting to see what the Bank of Japan is doing to go to market potentially. But yeah, I think if they hold fire, then we're going to trade quite a bit higher. The other one is the RBA. I'm probably going to be up for both of them, because I do think that if we see a bit of a rally on the Aussie, yeah, that's one that I'd like to get perhaps involved in. There is what else is in there? We have the S&P, of course, as well through later this week, and that I reckon they're only pricing between 25 and 30% chance of the S&P reducing rates, but so there's your surprise trade that they actually do, and I'm still a bit positioned for that, and it's a there's about this. There's so many, you know. I mean, Banxico later this week, they're expected to cut, but it's all going to depend on the statement, yeah. Whether they tell us, yeah, now we are on our way to lower rates, just like the rest of the LATAM banks, or are they going to look rather at the States, which kind of my opinion is, and they can hint at it at. Of course, once they start cutting, they will continue to cut. But if they only do 25 BPs, they will still be at 11%, and still, in my opinion, a bit tough to be short megs. But those are the main themes I'm looking at. Sterling is going to be a difficult one, because last week we saw the consumer, and I don't know who's being polled, okay? Inflation expectation coming down. So we've got big numbers coming out there on Wednesday, I think, and that's the day before the Bank of England. But I do sort of agree with Dale that it does seem to show signs that euro sterling is I don't know, it's looking for that bottom, you know, and I know if euro sterling breaks 85, it's probably going down to 83, but it doesn't seem like it's going to be an easy nut to crack, you know, that downside. So perhaps combination CPI, Bank of England's looking for a bit of a rally selling cable. Could be, could be.
That's why I think that a range extension out of here is just, you just wait for it, because
Yeah, you have
whichever
to.
way we go, whether we break out to the
Yeah.
upside or break down, there's your targets right there. I mean, it's very simple. So just,
and you have to wait.
you have to wait.
I'd say not
it-
necessarily for the Bank of England, but you wait for the CPI.
Yeah, and just wait for the break. Let price,
Yeah.
guide you out of here. So
What's a BOE going to do?
Nothing.
Okay. Sounds.
and there's your answer, Dale.
That was
There's
quick.
gosh, Kman, it almost sounds like it would be great if you wrote like some sort of like newsletter or something. You could really put this all together for people. That's what I'm saying. Anyway, hey guys, I want to say that it's not Kman, thank you for stepping in for Ryan. Ryan went to some heavy metal, like 1980s heavy metal biker concert last night.
Yeah,
with his family. So
he did acid, I heard.
Yeah, he might have done some shrooms and some acid.
They're not 19; they are rather 80.
and and he's got his handlebar mustache going on today.
Oh wow!
So Ryan will be back tomorrow. So thanks for covering for him today. And Dale, it sounds like you're in good spirits. Good to have you here. And
I've been up since 1:30, Blake. So,
dude, why? Crazy.
You know.
Well, you got to pee.
You got. No. Same old stuff. I haven't beat it yet. Anyway, this today, everyone that's here, this was a classic example of the team, us trio, exemplifying that if you don't learn how to change your mind, you won't have any change left. And keeping an open mind and being flexible and continuing to assess and reassess as the market moves forward. Because there weren't a lot of dollar bulls last week. Now it seems like it's unanimous now. So anyway, that's a great example. Don't get stubborn about, your narratives. They change and change with them. So and thank you, Kman and Blake, for a great show, and getting people to think about the week ahead, especially with all these central banks. Nice job.
Well, thank you. Appreciate having you here, Dale.
Thank
and
you,
thanks,
Dale.
Kman.
Cheers, guys.
Okay. All right. Thank you, guys. Stick around for Nargis. Nargis, welcome back to F.A.C.E. How you doing this morning?
Hi, good morning, Dale. I'm doing good. Hopefully you are doing good, and rest of the team. Happy New Year, I guess. I think we met in January. Yeah, so I guess.
Oh, okay. So, I want to start off, and you may want to start sharing your screen. I want to start off with, like when I had duped the schedule, and I had to rejigger everything, and it seemed like you were why is being on F.A.C.E. seems to be very important to you. Can you tell us why?
Because I like you. That's one simple reason. Yeah, that is one simple reason. One of the thing is because, number two, it's a great team. You guys not only talk markets, you also give a detailed explanation of why it is and what it is. Most importantly, you allow the guest speaker to speak their mind. Like, if I have some content, you allow me to give that content, which is very good. Where most of the places, the narrative is, the other person is, directed to speak, or you're not allowed to give your thoughts as openly. And that part I like. And so, and I like chatting with you. I feel very comfortable. I feel happy, and plus you were the first one to recognize me. So that attention, that personal connection feeling is always there, that you were the first guy who noticed me.
It's funny.
Or my work, rather.
I've heard that from a few people that are big now, like Luke Groman. He said, I kind of gave him a start, and I heard it from David Brady. He said, you put me on the map. So I guess I'm doing something good for others, and that
Yeah,
always
definitely.
gives me
Yeah, no,
satisfaction.
definitely. Yeah.
So what's on the docket? We going to 7,100? I know you were looking for if we got to a certain level.
7569.
75.
Yes.
Okay, I knew the
75.
first digit.
Yeah.
So
Yes.
go ahead.
So yeah, I remember when we talked. I think 2 or 3 last year probably, when we were still in early 3000s or something, late 3000s, kind of coming to the low. And that was when I was like, we had done the 3 narratives, like, it'll go and retest the high. I was doing this monthly is better. So I was like, we may go, and this black line was the place where ES would generally like the retest. And we were
Right
like,
now,
okay.
I'm just seeing links.
Oh, is it?
Yeah, I'm seeing links of different charts, I believe, and dates.
Oh, is it? This is,
Yeah,
I'm showing my chart, right? I can,
No.
let me reshare it probably.
Okay.
Okay.
There you go.
Okay. This, how can I put this up? Yeah, here. So earlier we were here, right? I mean, we were here somewhere, and I was thinking that there could be 3 scenarios. One is ES retest of the high, which is this black line. This is the place where it likes the most, where it would like the most if it wants to fail. So we reached here and we got the reaction fast and furious. And then the other one was, it'll go and do the complete cycle, 7569. The other one was doing the midpoint, 51.85. And right now we are exactly around there. It hit 51.85. I mean, the old contract did, and the new contract hit 5257. And since then we are thinking, right, what can happen and all that. So it's dancing around that number. So this is there. So this is an important cycle juncture where the next decision will come, after it's danced around a little bit, right? So the first jerky reaction we did got here when it hit first, and then it's a whatever it is, consolidation, distribution, whatever, we'll come to know. So 51.85 is where I would see, either it is above it, then it's like, bullish, it'll still try to hit higher, around 5,300 or so. Below that, some weakness starts setting in, and we may, go and retrace a little bit. How much, how long, we don't know that, because the only thing right now is the way I've noticed ES behaves is, it can recycle and it can adjust itself, but SPY and XPX doesn't get a chance to do it. And hence, whenever the pullback comes, it is just about normalization of those two. So they'll come and hit their 50 MA or something on a smaller time frame, like 4 hours and daily and all that, and they'll be happy. And after that, the market again gets bullish. Up till now, from October to now, pullback has been a big issue. It is not happening. It's merely 50 points or so, and it can continue. I mean, there is absolutely no reason. It is just releasing its pressure by doing the minimal, and continues going. So on,
So you do cycle work. What's it based upon? The cycles.
GAN.
Okay. Do you have anything April 9th?
April 9th. Yeah, actually, mostly those are the turn dates. April 9th would be definitely a new moon time.
It's a total solar eclipse.
Total solar eclipse. Yes. Yeah, I was thinking some eclipse and all should be there. And
the market bottomed on the last eclipse in late October, early November.
Late October, yes.
To the day on the eclipse.
So yes, that
I'm
is
thinking
so
if we're going up into it, there could be a reversal.
Yes, definitely that is a possibility, because this quad witching, it's all about being bullish. So the effect only comes after a few weeks, right? So and so far we are going from full moon to new moon. So new moons have been more bullish, and full moons have been either slow or sideways or some pullback. So we are getting it on Saturday. The full moon would be there. And so next week, you know, maybe it can see a little bit of pullback depending on where it is and how much it wants to do. But definitely April was sometime, I was thinking if they delay March, then April could be the place where, you know, we could get some pullback. So that is there. Yeah. So this is what I had, you know, 7569 and 5185 is our midpoint.
Yeah.
So all the 4 contracts, I mean, now it is only one contract, but your old March contract and June contract were nicely going between the levels with XPX also, SPY also. So it was such a beautiful dance, and I'm always amazed how all 4 things can, you know, align to the levels where it is important. 5257, 5185, you know, 507, and then XPX is 5113. So this is like, it was a very amazing dance for me. I always get amazed, and you know, even though I'm getting used to it, but still always amazing. And Nasdaq, we had the cycle level is 24337, and it is again 18,000, 18,500 midpoint. It is again right there at midpoint. So we have ES and we have NQ right at the midpoints, and from there 50% rule. Next, it will be a decision point coming soon whether they want to overshoot like what we did it in 2022. It was 2022, right? 4801 or 2021. It overshot that 46. This was 2022. Yeah. So it overshot by a few hundred points, and then it cracked. So here, you know, what it wants to do, 5,300, 5,400, and then see a good pullback. I mean, right now we're just talking about pullback. We are not even talking about cycle reversals or anything, because that can come later. It has built some good demands here. So, you know, all that is there. And the only question would be, for now, is this midpoint enough, or it wants to do the full cycle at one go? So now this will only be the decision point for me, at least, right? So 5185 craps all the way. And, you know, what people were talking few months ago, you know, all the macro stuff, that everything is bearish and it's going to die and everything, will that come down? Like, you know, it's an extended M. Instead of doing it like this, it may do it like this. Like, you know, this leg would be a little bit extended and then it will try to pull back, or it just does, you know, regular pullbacks and everything and keep going on till 7569. So for me, only these 2 would be my decision points, whether it's only half cycle for now or it's the full cycle for now. So that's all I'm going to look for.
How will you know?
Sorry?
How will you know?
I would know because only by the level. See, if it loses 5185, then I would say, okay, weakness is setting in. Then I would go from there, one cycle level by cycle level, if it is breaching. Currently, the only tricky thing the beast has done is XPX has left a lot of gaps around here, somewhere here, right? Yeah. So even if it comes down here, fills those gaps, we cannot say that it has become bearish, because in order to become bearish, the price, or rather go into bear market or whatever we call it, it needs to break here. And by the time it comes here, lot of damage has already been done, right? The street will always be, or will already be screaming, you know, we are dead and we are going to die or whatever. So this is what the seriousness. But if it starts closing below, then definitely the weakness is here. Up till here, it's still a retest of the low. You know, it's trying to.
Yeah, I would call like that 4,800 level a breakout.
Yeah.
And if it takes that out, that would be a negative sign.
That would. Yes, this black line, I would still hold it as something important.
46.
And it is 46. 46, 30, 50 around there. And there, you know, then it opens all this zone until 4,200, right? This is the biggest gap it has in terms of price, from 46 to 42. That is a big number, 500 points.
There's a 400 point gap, or the gap is filled at 42?
No, meaning the distance, like it can go that much if it wants to. because there is nothing here, right? It's empty.
Okay.
This space is empty. So that's what gap.
Got it.
But XPX has gaps. So yes.
Okay. Okay.
Yeah. So we are there, and your NQ is also, you know, inching along. So 441. If it stays over 441, then it's, you know, it's kind of a strong, but comes down below it and tries to, you know, goes below these two lines. Then, you know, those weaknesses coming in. QQQ has this big gap as well. A lot of gaps, actually, a lot of gaps going, you know,
Yeah.
the ETFs are a lot of gaps. So that is an open area. Yeah. And also interesting thing is the March contract. Yes, that 46.95 gap has not been filled. It went to the new contract, but that old contract gap is still there, which is very surprising. At least I have not seen in my short career into stock market, I have not seen that happening. So that is something very surprising that it can do that. I thought, you know, the
How
ideal
about
thing is to fill all the
S&Ps
gaps.
making new highs without the NASDAQ 100, which led the advance and now
That
is lagging S&Ps?
yes, that is absolutely possible, because if you see, Dale, this is what I've been noticing. The indices are now separated from their own stocks, which make the biggest percentage, right? Your Apple was not moving, your Tesla was not moving, but Nasdaq was making new highs. All the Fangmans were sitting at a constant level. Like Microsoft was chopping, you know, Netflix was chopping everything. Tesla was coming down. Apple was slowly trickling down, but Nasdaq was doing good. The only thing we had is the meme, the, you know, Nvidia going meme that we had, right? So I don't know if that would have any that big of an effect on Nasdaq, but you know, the meme is a meme. So I'm thinking why they would do it to semiconductors, because Nvidia is not like, you know, GMC, not GMC. What do you call that? GameStop thing where, you know, it could go crazy and nothing would come into effect. Nvidia is a prime, you know, Main Street company, and it running like that. I was thinking, what is in store that semiconductors are behaving like this? So that is one question I have in mind. The answer will come, you know, we will see. But for now, that question is, I don't want to give that question away, and keep in mind why semiconductors would act in a way, what is coming in, what is it that we are not seeing, which the market is already pricing in. So that question I'm asking myself.
Okay.
I know this is one stock which everyone was or is still looking at it. Now again, it is up to 26 points. It didn't hit 1,000, 975 it hit, and it pulled back sharply from there. So 841 is where its sweet spot. It hasn't broken that. It is coming back up from there. Now the big question would be, would it want to touch that 1,000, right? The cycle level for Nvidia is 1157 to 1250. That is its range, and it's already done maybe 75%. At 975, 75% to 80%, it has already hit the cycle. So again, the whole point is, will it completely, you know, do that? So once it goes over 1,000, then the mindset changes, right? Now it is 1,000, so what's going to stop, right? But I would still be a little bit cautious on it, because these runs, you know, these straight line runs generally brings in a little bit of caution on how much it can go and when it can, you know, pull back. Where people expecting the pullback, it may not. It may suddenly do it, probably overnight or, you know, out of the blue, and like a lot of people can get stuck into it. So you know, if you are trading, then it's okay. Have your, you know, whatever your mental stop loss or your profit taking percentages is there. And the other one which had gone crazy along with it is this supermarket microcomputer. So around 200 something, its previous cycle level, I had said that it has reset the cycle to 729. And in a few months or less than few months, it not only did 725, it's almost going to do its third cycle, which is around 1500, 1501. Then, you know, it already hit what, 1229, 300 more points left. So, it's already hit the lower offset. So again, why these semiconductors are behaving this way, the prime companies behaving this way. The other thing which I was noticing is that they were bringing Apple down, they were bringing Tesla down, and this Nvidia was going up. So now NQ needed a little bit of test and all that. And if it wants to continue going higher, then from 169, they would bring Apple up. And so far, that is what is happening. It hit its previous cycle level, 169 Apple, and now it is coming back up, 174. 174 here, right here on this green line. So the question is, how is it a retest of the high, just trying to test a little bit of high, a lot of oversold conditions and everything, or the narrative to support NQ is still there, right? Because we have today Nvidia's some event is there apparently. So what happens after it? Then we have FOMC. So bringing Apple down enough, then it becomes the supporter. Microsoft has not moved a lot. It is still ranging, very tight ranging. So so far it has been holding this 397, 396, and it returns back from there. So that narrative is there. So I will only get bearish below, below this orange line around 396. And then, but till then they are supporting NQ. So the question is, it does look like that they still want a little bit higher before, trying to do anything. So that may take us into April, past FOMC. And so far, no pullback, which means Powell right now is a little bit, up till now, what was happening was before they would bring the market down, then Powell would be the knight in shining armor, market would react to it, and, we would go higher. We would, run from there. But right now, we are already running. We are already at the all-time highs. 52.57 was the high, so another 10 points. Oh, one of the important thing is the old contract, March high was 51.85, and the June contract high was 52.57 before the contract change. And after the contract change, the high was 52.41, if I'm not wrong. So that 52.46. So another 10 to 12 points is remaining for it to hit 52.57. ES doesn't like those unfinished business, so it will try to hit that for the new contract. So that's another data point to look at. What happens when the June contracts hits 52.57? Will it coincide with FOMC? And if so, then what kind of reaction they want to give? So that is a very important level and timing I will watch, how they want to do it. So if they overshoot it, then we are going to 5,300, probably 5,400, 53 to 5,400 in between. But if 52.57 they want to crap it, then I'll look for a failure below 51.85. So FOMC plus these two numbers, I'm watching it very, very closely.
Okay.
Our
Anything
VIX.
out?
Sorry, you go ahead.
Go ahead. No, go ahead, VIX.
No, yeah. So VIX, so far it is maintaining 14, 13 point something and 14. So nothing has happened. It hasn't broken the 12 level so far. No, it broke 12 level, 11 point something, but it hasn't gone to 11 yet. So it's still holding, this 12-ish area. But it hasn't been able to go over 15. It hasn't been able to retain over 15. So between this orange line to this, it comes and rests on this line so far. So, if they wants to do it, then somewhere around 13-ish, need to see if it wants to bounce. But below it, we have again the mid 12s or 12. But these are the levels where generally VIX holds or it bounces. But if they want to keep it lower, then the narrative again it is that they want to take it above 5,300. So that's how I'm watching or trying to relate how VIX is going to play out. So once it loses
Does it mean
14,
anything to you that we've had successive new highs in the indexes and keep putting in higher lows in VIX?
Yes, it is there because this is higher lows, which means VIX is still at a good point where it could just shoot up. It just have to cross this orange line, 15 point something, and then this whole area gets exposed. See here, nothing is there, right? For it to go, just a little bit of spikes here. So the rest, next area is 21 approximately. So it could easily do that. And so what I was trying to say is, like XPX also, right? Remember we had that 500 point window, and so here also we have that window. So the next move, if it happens in the opposite direction, that could be a bigger move. So that's the only indication we have. When it's going to happen, from where it is going to happen, that things needs to be seen. But if it happens, then this window is a bigger window. That's all we can say right now. For 4,800 to 4,600 zone, if it doesn't hold, then it opens your 4,200. That's there. I heard you guys talking about dollar. This 103 has been its sweet spot. It goes and comes back up. So basically between 100 to 103, it's just roaming around, not deciding what it wants to do. Basically from last Jan 2023 to now, almost a year, it is chopping in range after it hit this 114, 115. Yeah. And nothing has happened. So this area 100 against holds, it pulls back up from here, but it hasn't able to go over 106 or so, right? 106. This is, 100, approximately 106. So this 103, 106, then 100 and 103. Chop zone, either it goes out of this or goes below it to give it a trend. One of the important things which I was saying was our oil was trying to get bullish from hitting out 62. And from there it has been bullish, and 77, holding 77, it is still on a bullish track, just 81, around 81, 80, 81, 82, where it is finding a little bit of resistance and not going. Another, I don't know if people still remember it or not, this 130.5 was hit in Globex. It was not hit RTH. So this number is still pending. When it's going to do, we don't know, but once it goes above 92, 93, then this becomes a possibility. So 80, above 81, then you have your 91, 92, then this 130 zone kind of opens up, so sorry, Dale, you were saying something?
No, but we have to wrap it here pretty soon.
Okay.
Best way for people to find you and follow you?
Yeah. So on Friday, I had given this setup, right, to see the market going higher, 52.25, and it hit today. So
nice.
Yeah. Where is
so that's where you find it, right there.
Yeah.
007 secret agent trader.
It is so much fun, right, to just figure out what's going to happen, and then you feel like a child where you got your favorite toy. Oh, it hit that or it did that, So yeah.
It's the best jigsaw puzzle in the world.
Jigsaw puzzle, yes. Finding patterns and then being happy that you got it right.
Yeah. Well, it was nice talking to you again, Nargis. I wish you the best.
Nice talking to you, Dale. Yeah, and I hope you feel good. Yeah.
Thank you. Me too. And we'll get back together late spring, early summer.
Sure.
I'll try not to mess up the schedule this time.
No, it's fine. It's fine. I just I was a little bit not prepared, but then when we talked after that, I sat down and jotted a few stuff down. So yeah, it's there. Yeah, but talking about market, it's always now ES has become like my second skin, so I can talk in my sleep as well. So that's good. Thank you.
All right, market. So Nargis dreams charts. All right. I have market dreams too. So
I know.
Thank you very much, Nargis. The best to
you.
you and yours.
Have a good day. Yes.
All right.
Bye.
So that's a wrap, everyone. Follow Nargis. Some interesting work. And you could join the team in 15 minutes on the Morning Edge. Good luck today. Good hunting. And don't just count your pips, count your blessings. Adios. You're welcome, Patrick. People are thanking you, Nargis. Thank you very much, Ingmar. And we'll see everyone for Turnaround Tuesday. Adios. You're welcome.